Hey, good afternoon, gents. Good afternoon. Hope you're doing well, guys. 1:30, Thursday the 3rd, ready for some US market action. Interestingly enough, I just actually looked at the DAX from this morning in our European trade, which hasn't triggered, but look at what happened with that breaker structure limit there for the DAX this morning. So that was the long. And we came up to the breaker structure limit for the entry, and bang, look at the size of the move we had away from it. So, obviously quite an interested level there. A lot of seller protection going on at around that 1911 area. But apart from that, not a lot's happened, guys, since we were on this morning. In terms of additional movement over the asset classes, we've got the oil outcome, which, as expected, did run up to the loss. So, yeah, been in it long enough. It doesn't surprise you, but you always get that kind of sort of feeling, You always have to sort of shrug it off, especially when you're coming to within such a close margin of your target. We were basically done and dusted at 1 to 3, and that was 45 minutes into the trade. Good afternoon, James. We did get so close, and then for it to come all the way back to the stop loss, it's a little bit of a kick in the teeth. But as I will show you down the line, this week has been incredibly impressive. Very, very strong start to Q4. So really sort of ready and raring to go for the sort of end of the year, really. I can't believe I'm saying that out loud. Yeah, it really is coming to the end of the year. So anyway, oil's done, guys. In terms of open market exposure now for the fund, we have Euro Yen continuing to run, and that one is what it is. It will be closed by myself tomorrow before the market closes for the weekend. We also have the pound against the CAD, which actually came down to do a second stage tease. Look at that. I mean, come on. 177 to, what is that? 177.215 with a TP of 177.20. So you're talking about a pip and a half away from the target. My broker, the spreads didn't even trigger the target. So, there's no way. Yeah, it just didn't trigger. So, yeah, real pain. And now the bloody things, we've essentially, what we've got here, folks, is we've got a double bottom. Yeah, that's basically what we're looking at there. And that is a double bottom. We've also formed, if you go to the 1 hour time frame, I can see this on the 15 quite clearly. It's actually, to be fair, it's not that clear on the 1 hour. So on the 15-minute time frame, you may see this as well. So we have got a W starting to form. We get a break, close, and retest to this point in liquidity, and then we break structure to the upside. That's over. We might come all the way back up into this area, 178.10, and then go down and hit TP. So this is just a big break, close, retest of that daily point there, of our breaker structure area. But the fact of the matter is, there's no way where we are at the moment in this week, we're going to get all of that done before the weekend, which means I will have no choice but to manually exit that trade at some point tomorrow in the evening, which means I'm probably, if this doesn't work out today, I will probably end up exiting that trade at a small loss or at a small bit of profit, unless it stops the trigger, So we just really got to, what we're looking for now in terms of like the key point here, the key takeaway is we don't want to see this happen. Okay? We see this happen, it is not good. That's a big bad sign. This is the kind of face that it will give you. And it looks like it's going for it right now. I mean, it really is. We've come down to this area. We're building up for a new position. we got all the evidence to indicate this. You know, big breaker structure just taking place. You know, next 15, 20 minutes, half an hour, we'll probably see the start of the pullback if it doesn't just power straight the way up. And that'll be that. But yeah, real shame, guys. You know, real shame to come a pip and a half away from your target. And then for this to start piss-assing about. So, you know, trials and tribulations of a trader right there. Hedge and go long. Yeah, I'll leave that one down to you, man. I'm definitely not going to be buying back in the GC at this stage. My bias is still confirmed. It's still short, trading away from big point of daily liquidity up here. So, yeah, I'm not going to be farting around with starting to hedge in the same instrument. Right? I'll mitigate risk, you know, by other means. Be open to that, but at this stage, I'm just not too fussed. I'm just not too fussed. It's going to do what it's going to do. And then look at the GJ. This is the only other one that we've got running now. Look at that. Not one, not two, but 3 attempts at the target. You know, we are talking really marginal differences here. The TP at 192.092, the low of 192.133. You know, yeah, I know, Matthew. It is. It is painful. It really is. You know, it's not painful in terms of, you know, oh, I really, really need the trades to land in for any other reason than we are getting to the end of the week. You know, I'm not leaving any of these trades open over the weekend, which now forces me into a position of needing these to close out. You know, I want them done. And we've come so damn close. Oil, GC, and GJ, we've all come so close to these target profits, and it's just died a death, hasn't it? You know, so yeah, it's a real shame. I mean, if all 3 of these were to go to stop loss, that's 0.75% drawdown in those 3 instead of the potential. That was a 1 to 3, so 0.75% profit. The GC was a 1 to 2.2 for 0.55% profit, which is now you're up, you know, you're talking about 1.3%. And then with the GJ on top of that at a 1 to 2.1, 0.52, you're talking about 1.7%. Instead of incurring the loss of 0.75. And obviously that's fine because that's trading. But I'm talking about because of a pip difference of an average of about 1.7 of a pip. You know, 1.7 pips is the difference between that win and that loss. So yeah, it's frustrating, but there you go. That's where we are. That's what's going on, and just gotta carry on doing what you're doing. So what I want to do is have a quick review of the track. So let me change windows. Wherever the hell it's gone. Hang on a minute. There it is. Change windows. There we go. Right, so let's have a look at the old track then. So the track this week, I mean, look at this, right? I mean, this is some pretty beautiful stuff. So Monday was the 30th. So on the 30th, we had 1.3%. On Tuesday, we had 1.6%. And today, so far, we have a 2.6% day. Now, of course, we still have 3 positions open and running. And on top of that, we also have the US markets this afternoon. So we need those US markets, obviously, to fall into play. If the US markets go well again today, this could be One of the biggest returns in a single day that we've looked at so far. I mean, 2.6% is really pushing it. I think the limit's like 3.1 in a day. But it's doing really, really well. Now, if we scroll on down here, weekly return so far is at 6.2, which is fantastic, isn't it? 6.2%. Yeah, bloody amazing. I mean, yeah, bloody amazing. I'm not looking for anything like that. You know, I'm not hunting for this whatsoever. So, yeah, it's very good. Very, very good indeed. All going well. Risk parameters are really good as well. In terms of consistency, a nice mixture of wins and losses, but all very stable. The trade win percentage is ticked up by about 0.3%, I think, which is good. That's nice, as long as I stay away from that 54% point. So, extremely happy. And also, of course, we have our total return milestone yesterday, where we breached 300% in the fund. And we're already on 308%. Obviously, you know, we can incur a few more losses today. That might be a bit lower. But it definitely won't be a loss of 8%, which means we've still ended the week up at over 300%. Which is fantastic. I mean, it's really, really doing something right. So that's all good as well. Now, looking at our markets again, of course, yeah, you know, we are where we are with these bloody annoying things, and that's fine. We'll just let those go. Looking at the US markets then this afternoon. So, yesterday, the trading margins were identical to what they are today. In a nutshell, the US 30 Dow Jones, the NAS 100, they are absolutely identical. So nothing, in essence, is going to change. So all we're looking at here on the NAS 100 today is this inflection point as the beginning of our high. So that's going to be our ceiling in price action today. And then our floor in price action is going to be down at the lows here. That's the floor. And your jobs are to trade as best you can in between these two margins. Do double up on the trades if you can. And I mean, if you take a long and you hit the top and then you instantly get a fresh break of structure, take the short as well. Yeah, get it done. If we're looking at the break of structure points, explicit instruction here is going to be looking at these inflection points here. Look at where these have bounced, right? So what I'm going to be doing is dragging a zone across like this. And this is going to be your access to buy into the NAS 100 on the proviso that, hopefully you guessed it, we move into the liquidity first and then reject and bounce back. And on the rally, we break through this element here. Once we break through this, we're ready to go. We can lock in the trade and look for that run to the upside. And the short break of structure is not quite as clear, to be fair, but it's going to be at this area in here. That's going to be your short break of structure. So a bit of a wider one than the floor, and that's absolutely fine if it's, you know, it's necessary in this case. And that's going to be your break of structure to trade the short. Now, and again as well, just so everyone's absolutely clear, the market needs to power up, hit liquidity, reject liquidity, and then trade to the downside. And that's how you would go about doing that. Now, the margin to trade between these two areas is pretty large. Okay, it's quite a big trading margin today. There isn't really a no man's land, but the middle of the range is not where we want to be trading. So we do want to be looking at trade ideas coming from either above or below, and then taking the full swing. And it's your jobs to be disciplined and be patient and wait for the price action to reach one of these levels before getting involved. Now, if we go to the Dow Jones, it's almost the same thing. We've got the floor of the market in here. Let's have that probably just a little touch higher. There we go. And we have the ceiling of the market. The ceiling of the Dow Jones is slightly different than the NAS 100. It's not quite as clean, but I'm going to put it there. Okay, so you do have the capacity here for price action to trade really quite deep into the liquidity and then reject it because of what's happened in the past. All right, if I drag this one, you can see that inflection points are still being carried out nicely to the left as well. So on the proviso that these are trading margins, again, the breaker structure for the long is probably going to be best situated at this area in here. And this is probably more heavily weighted towards recent price action than in the past. It's still a nice breaker structure area here, but as we've seen, we did get a couple of fake outs and the market actually dropped back down again. So this is going to be the level that we're working with though. I think that looks quite nice, and we are looking for price action. Again, very similar to the NAS 100, push into liquidity, reject the lower limit, and then break structure. This is our trading margin in here. This is where we want to be taking, this is where we want to be placing most of our positions. Now, the breaker structure for the short, much easier, or not much easier, but much better defined, much more well defined, is this element in here. And again, exactly the same process being carried out here. Price rally, we break up into liquidity, and then we drop back down to there. Okay, and that's the plan of attack for the Dow Jones. So does that make sense? Spot on. Good man. Yeah. Okay, great stuff. What about you, Dookie? If you're at work, then obviously don't worry, mate. I know you got your day job as well. Yeah. Don't worry, Dookie. I appreciate you are at work at the moment, so that's fine, buddy. No problem at all. Yeah, so that's the plan. So what I would suggest is do not stray from the plan at all. Follow the plan. Okay? We trade like a team. We trade as a unit. That's the plan. This is what happens. Obviously, a little bit more of a relaxed version, I'll grant you. But I used to get in first thing in the morning, and I used to grab a coffee, and I used to sit there at a table with a screen at the end of it, a bit like a conference room, but it was much smaller. And we used to go through and we used to do this together, but in person. Now, obviously, back then I used to be offered suggestions as well, things that I hadn't seen and things that were on other people's desks that they were focusing on. But this is essentially the process in which gets carried out. And we all trade as a unit. Now, I do understand it's not quite going to be the same. But if you do try and have that mentality, then you are going to be making money. It's you know it, guys. You know it. It's impossible not to. So let's try and carry this out down to a T. Wait for the price to push in, reject and execute. Wait for the price to push in, reject and execute. No 2 days are going to be exactly the same in the market. So just because yesterday and the day before were really good doesn't mean the day is going to be good today. It could be crap. To be honest, we have no idea. But using the power of probability, this is the best that we've got to work with. Now, we haven't actually discussed breakouts on either side here. And I've got to be honest, guys, I'm not entirely sure I want to. Looking at the Dow Jones at the moment, we would have to, and I repeat, we would have to wait for the clearance of 4180 in order for me to get any kind of selling interest whatsoever. which means then the market has to be dropping before access to participation to there, which is a 0.7% decline and the best part of 300 pips down, which means that the short is not accessible. If I want to go long, then it's going to be a 0.6% move to the upside, and I'll be waiting on a break close and a retest of this element before I'm even interested. And I tell a lie, actually, it is 0.7 as well, where it's currently trading at the moment. So it's not feasible today. The trading will take place between these margins, or it won't take place at all. As for the NAS 100, exactly the same outcome. Now, this area here is a big point of liquidity. But the thing is if we do get a breakout down below, we've got a major inflection point right there as well. So your margin is now reduced to basically nothing, and therefore to clear through and to take short, you're going to want to trade down to there, which is a 1.18% decline before you access the short. So again, risk profiling here, this is essentially what we're doing. It's not accessible. The one for the long, slightly less so, probably about 1% from where we are at the moment. But just like the short, we also have this bloody thing stuck right in our way, which means if we want to go long, you've got this tiny little margin here, or you unfortunately have to have the entire thing and wait for 1.2% to 1.26% of a rally before getting that entry barrier on side, that access point. So again, all the trading itself will take place between these two margins for us today. And there's nothing wrong with that. I mean, that makes life simpler, right? If we know exactly what we've got to work with and there's not going to be contingencies in place for longs and shorts, it does remove parts of the process and make things easier. So on that basis, I'm probably going to wrap things up there, team. Like I said, I'm not going to be focusing on any FX stuff or anything. I'm not going to be plugging anything into the fund. I will be away tomorrow, as you guys are aware. It does not mean that I won't be, chatting in the room and stuff like that. I'm sharing the drive with the missus. So when she's driving, I will have a message and stuff. And we're taking an extremely dangerous route up to summit a couple of mountains tomorrow, which is it's a grade 1 and a grade 2 scramble. Now these are grade 2 is a no joke. I mean that's into the realm of harnessless rock climbing with big packs on your back. So we're going to be setting off for that on Saturday. So if you guys are about, I will send in videos and a picture and stuff so you can check it out, because it's going to be pretty spicy. But yeah, it's some gnarly stuff, but I'm looking forward to it. So anyway, have a great day. Have a great day today. Let's go kill it this afternoon. Follow the plan as best as you can, and a great afternoon as well. And I really, really look forward to catching up with you tomorrow as well, just to see how you're getting on, of course. And then I'll wish you guys a good weekend tomorrow anyway. That's fine. And yeah, and have a good one, guys. So take care, trade safe and all that jazz, and I'll see you then. Thanks a lot. Cheers, guys.